This is no longer a growth story. It's a perfection story. Prysmian is executing extremely well. Margins are strong, demand is real, and the backlog is massive. But the stock isn't pricing good. It's pricing everything goes right. And when a business depends on everything going right, that's where risk starts. On the surface, the results look strong. Revenue is growing, margins are expanding, and EBITDA margins reached around 14.2%, up year over year. Even more important, the transmission segment is delivering over 20% margins for a second consecutive quarter, which is driving most of the upside. There was a small EBITDA miss, but it wasn't structural. It was timing. Installation delays shifted revenue, not destroyed it. Underneath that, almost every segment actually beat expectations. So what changed? The business didn't just grow. It became higher quality. More of the earnings are now coming from high-margin transmission and emerging digital solutions tied to AI and data centers. The stock is expensive, not slightly, structurally. The current price is around 124 euros, while fair value is estimated at 90 euros. That's about a 38% premium. So what needs to happen for this price to make sense? You need sustained high growth in transmission, continued margin expansion, successful execution on large projects, and real monetization of the AI-driven fiber opportunity. In other words, the market is not pricing what Prysmian is. It's pricing what Prysmian could become, if everything works. Prysmian is transforming from a cable manufacturer into a high-value energy and digital infrastructure company. The core idea is simple. Move away from commoditized cables and focus on complex, high-margin systems, like submarine transmission lines and data infrastructure tied to hyperscalers. Strategically, this makes sense. These are markets with higher barriers, better margins, and long-term demand driven by electrification and AI. But here's the catch. This strategy increases execution risk. The more complex the projects, the less margin for error. In high-voltage transmission, Prysmian is strong. This is a concentrated market with only a few real players like Nexans and NKT. Barriers are high, and reputation matters more than price. But outside of that core, it gets weaker. In electrification and digital solutions, competition is intense. Products are more standardized, switching costs are low, and pricing pressure is constant. In fiber and telecom, players like Corning operate in a much more competitive, almost commodity-like environment. So, Prysmian is a mix, a high-quality niche business sitting next to lower-quality competitive segments. The biggest risk is execution. This is a project-driven business. Large transmission projects take years, require precision, and any delay or cost overrun can hit margins hard. One mistake doesn't just reduce profit, it damages reputation. There's also a cycle risk. If investment in grids or data centers slows, demand drops. At the same time, the industry is expanding capacity. If supply catches up too fast, pricing power disappears. And finally, margins today are elevated. If digital demand normalizes or competition increases, margins can compress quickly. The upside is real, but demanding. If Prysmian executes perfectly, the story works. Transmission backlog converts at high margins, digital solutions scale with AI infrastructure, and the business mix shifts permanently toward higher quality earnings. There's also a structural tailwind: electrification, renewable energy, and data center demand. These aren't short-term trends, they're multi-decade drivers. If all of that aligns, earnings can compound and justify the valuation. This is not a turnaround. This is not early-stage growth. This is an execution bet at a premium price. Prysmian is a high-quality business in the right markets, with real demand and improving margins. But the stock already assumes success. There's no margin for error. This is for investors who believe in flawless execution. Because at this price, you're not buying the business. You're buying perfection. I'll break down the next one soon. Subscribe if you want to stay ahead.